Welcome back to the channel. I hope you're having a great day wherever you are around this beautiful planet of ours. When will we hit 10K Bitcoin? Let's look at the data today in terms of time running out. Let's see if we can uncover any possible way that the market can get to $10,000 based on the last 12 years of data that we have for Bitcoin. Today's video, we're going to look specifically at timing. We've got cycles coming up and of course price ranges as well. Like, subscribe, bell notification, click those things down below if you so choose to. I'll remind you again at the end of the video. All right, let's dive into today's video. Of course, we have just seen a new cycle low for Bitcoin yesterday. So I think now's a pretty good time to have a look at what has happened in the past for BTC through the last 1, 2, 3 cycles as we start to head towards the end of this particular cycle. And I'll show you exactly why that is. And if there is an option, a possibility, a probability of Bitcoin going under $10,000 or at least getting to that point. Now, if there's not, of course, we have to set ourselves up for the possibility that it doesn't happen because at the end of the day, there is nothing guaranteed in these markets. Just like on the way up for the bull market, there was no guarantee that we would hit 100,000 BTC, $100,000 on Bitcoin, the same sort of deal in the previous cycles. So where this is all stemming from and where we're going to start our analysis to get to the answer at the end of this is basically looking at the cycles in terms of time overall. A lot of people don't necessarily look at time, and I think that is a really big downfall of much analysis. People focus a lot on price. Of course, that's how we're going to make our money from price, but time cycles are the essence of all markets. And if we go back to a quote here from William Dilbert, Gann, the one who we reference quite often, time is more important than price. When time is up, price will reverse. This is over the course of Gann's entire trading history. If you're unfamiliar with Gann, get familiar with him. Very, very important trader to understand. So we've got a number of factors here that we want to have a look at. Obviously, one was time, and of course, price is how we're going to make our money. So on the premise that once time is up, time being the most important, and once time is up, price tends to reverse. We can go back into history and have a look at what has happened once time is up in history. Now, here we're following a 4-year cycle. That doesn't mean that the cycle has to have the exact same booms and busts as it has done in the past. And what we just saw in this previous cycle, we didn't get that massive boom that we were expecting into the peak. It kind of happened earlier on in the cycle as we saw from the market breaking out from October, November, December, January in 2021, January, February, March, and then we started to plateau out into May and April. So the cycle tends to work out in a time frame relatively the same. This is potentially the 3rd time it's going to happen. It's definitely confirmed that it happened on the way up. We had time ranges very, very similar on the way up. And so far, we're seeing them quite similar on the way down. This one is not confirmed. The current bear market cycle we're in now is not 100% confirmed yet for the low to come in and then the breakout to obviously give us that confirmation. So that's yet to be seen. However, if we're using the last 2 previous cycles, and of course, this is data, these are rules for trading and investing, again, discovered over 100 years ago now. This is how he traded back in the early 1900s. They're still relevant to today across all markets. Anything with a chart. Go to the stock market, go to real estate, go to cryptocurrencies, and it has all continued to work time and time again. Now, that's something you're going to have to come to grips to, and I understand a lot of people may not be feeling too comfortable with it. However, from the data, that's what we can see. So looking back at the first cycle, and this is what we'll use to move forward, just to see if we have another second chance at anything under 10,000. The first cycle went up for 1,148 days. So that was from the low to the top, 1,148 to that peak. The downtrend, 411 days. That was to this particular low here that came in January. The next cycle up, 1,068 days to the peak in December of 2017. Then we had 363 days down, nearly dead on 1 year there. Now, our most recent bull market cycle did almost exactly what it did last cycle in terms of time, 1,061 days. Now, if we were more aware of this at the time, we could have been thinking, well, the calls are for $100,000 Bitcoin, and we are starting to top out here in the mid 60s and trying to climb higher. It's more probable that we're not going to make the end of this cycle. So we're not going to make it to this price of 100,000 towards the end of the cycle. And that's the same sort of theory that I'm using now for the downside. And so far what we've seen to the downside is, as of yesterday, 376 days, because obviously the last 24 hours, we've just had a little bounce up from that particular low. So we're at 376 days. We've basically extended the last bear market by approximately 13 days, so about 2 weeks so far. However, if we go back to the first major bear market from the peak in 2013 to the low here in 2015, there's 411 days. So we're basically about 30, 40 days out from that particular low. So if that happened to be the case, then in terms of the time cycle, we have up until the last week of December. If we bring this down to a daily chart here so we can get a little more accurate reading, we're looking for about a 411 bars from the top, and that brings us out to a date of the 26th of December. That's basically Boxing Day or potentially Christmas Day. So basically any time around that period, we'll see where the price is at. And if the price is actually higher at that point, it then starts to swing the probabilities in the favor of prices potentially trending higher from that point, or at least not going to go past the low, whatever the current low is by that stage. And if it was to go past the current low, possibly not by too much, barring any sort of black swan event or liquidity crisis within an exchange, like we saw in the previous cycle here. So this is the 2014-15 cycle. On some exchanges, the price did spike lower than the January low here. So we had that price spike down in August. It took out that low slightly, but of course this is the index, which is a amalgamation of all of the data across the other exchanges. So some exchanges went lower, others didn't, and this is what the result is on this index. So if it is to be a low, maybe it's going to be higher, maybe not. But I am looking for, based on what we're seeing in the data and the facts from the charts, a potential second attempt at the low once we've put the low in. And this is what's referred to as a first higher swing bottom or first higher swing low. And this is on a more macro chart looking at the weekly here. So taking the previous cycle as an example, so we're trying to figure out how much time we have left here, when 10K Bitcoin, is it even possible for a 10K Bitcoin? And if we don't get the 10K Bitcoin and the 15 or 15.5K low is around that low, maybe it drops to 14, maybe 15 remains in play, then once we get to the end of the timing cycle and we start to see higher lows form like we did in the previous cycle, that could then tell us that we should start to look for higher prices. Not that it's going to boom like last time, maybe it does, maybe it doesn't, but it's basically telling us that time is nearly up. We're probably not going to see too much further downside, and we have to start pivoting in our own views based on what the data is telling us on the chart. And this pattern in particular, this first higher swing low, that we can see what happened last time, and it happens time and time again, that then gives us some sort of confirmation that the market is about to start heading higher. Once the next week comes in, or the time frame that you're watching comes in and breaks the previous top, as in it did here in February. So you had the bottom here in the first high swing low, and then this top breaks the previous top. That confirms the first higher swing low. And once you get the breakout of the tops, it's all systems go, like we saw in April of 2019. So this essentially could be the time that gives us the second chance if we get that first higher swing low. So that's what we're looking out for now until we see a confirmation of the low, some sort of significant move from a low, whether it's now in November or it happens next week, early December. It's still within the time frame of the last two cycles. And what we're seeing in terms of the shorter end, 363 days, to the longer end, 411 days, that's what we're anticipating for the possibility of a low and then a higher swing low. So what we could see from the previous cycle is we got the low at 363 days, and the first high swing low came in at around 411, 413. Of course, this is on a weekly chart, so it's only going to give me a 7-day reading here. But it's very, very interesting to note that the second low, the first higher swing low, came in almost dead on the previous cycle here. So the previous cycle was 411 days down from the top to the bottom. Then we got that first high swing bottom from the previous cycle. One thing that I've been referencing a lot is not to get too greedy at these points. There's a few ways that we can play this in terms of what action we can take to obviously start to fill our bags or get our positions ready. And I'll cover those just below as well. There are some good comments here on my Twitter, which is another good place to shill my Twitter and my Instagram. Links are down below. I often do Q&As on Instagram, so go and follow over there. Use those links so that you're not getting scammed by other accounts that are attempting to be me. So over here on this tweet, just like at the Bitcoin top, now is not the time to be getting greedy for lower and lower prices. We often hear 10K, 8K, 6K, 3K. I've covered in previous videos as well. Anything under these levels here of around the bottom here at 9,800, 10,000, or these particular lows here around 9,000 is not a good area for Bitcoin to get to. And I explained the reasons why in those previous videos, just based on the structure of the market. Of course, we want to see the lowest price possible and get in at the lowest price possible. But if structure starts to break down, and I see it under these lows here, if that's to break down, it's not a good sign for Bitcoin moving forward and in terms of the possible returns that we can look forward to in the future. Now, in terms of the greed, I'll read you out a nice little quote here from Gann's book. Basically, he says, the man who tries to get the last point or the top or the bottom eighth generally loses all his profits. You do not have to get in at the bottom and out at the top to make big money. That's essentially what I talk about here when we look at just taking a chunk out of the middle. And in terms of taking a chunk out of the middle, you can do it in a number of ways. So I've got a couple of options here in terms of getting that chunk out of the middle. You've got riskier options and less riskier options. And I've covered this in many, many videos. So that's why I say subscribe, like, do all those good things down below, right? The high risk, no stop loss plan is basically just to buy all the way down, buy all the dips. The high risk, no stop loss plan could also be buy now with pyramiding, meaning buy more at lower prices, but you have to have a pyramiding plan. The next option is high risk with a stop loss plan option. Okay, so that is buy now with pyramiding, but you might say if prices break down past this level, I'm going to sell out and wait because the breakdown of the structure tells me that we're potentially going to get much lower prices or stay at lower prices for longer, in which case I don't need to have my capital tied up in this market. So you can use stop loss options here. Now, the last one that I've got here is a low risk with or without a stop loss plan. It's probably best to have a stop loss plan, especially if you're new to investing and trading. The low risk is to wait for macro confirmation. And we've looked at macro confirmation being above bear market downtrends, above monthly swing tops, and above 50% levels. But of course, that means it's going to be a much higher price to get back into the market. And that sort of plan is something that I use for my altcoin investing. I don't want to buy DCA into altcoins all the way down. I want to wait for macro confirmation because, like Gann says, I just want to take a chunk of profits out of the middle of the market, not try and buy the bottom and sell the top, which leads to this great question here on Twitter. But why would you buy it in the downtrend? Doesn't fit with the usual advice. That is definitely correct. And I basically come up with a few different options for people because not everyone has the same plan. And as you can see from comment sections, everyone has a different view of the market. They want to be buying as low as possible, buying all the dips, and others want to play it safe and buy on breakouts. So as long as there is a stop loss plan and a pyramiding plan, meaning if you're going to get into the market, you probably want to be buying more at the bottoms. It's going to depend on how much income you have coming in and how you can manage that money when it comes to your own investing. Then as long as you've got those plans in play, you're at least setting yourself up for some sort of success in the future rather than having no plan at all. But yes, the safer entry option is to wait for the macro breakouts. However, this is cryptocurrency. Most of us here are degens, and we all keep trying to buy bottoms of markets and then wait for those mega pumps. And so if we choose to wait for those mega pumps, at least have some sort of plan in mind, even if that is just pyramiding for a more macro view of the particular markets. Now, in terms of the downside, again, we're looking at the time cycles here. And as Gann said, time is more important than price. When time is up, price will reverse. This is what he saw in the markets decades and decades ago, and it has continued to play out for the last 100 years and will continue to play out into the future. That's just the way these things work because it's made up of humans. So when we look back at the previous cycles, when time is up, price will reverse. Time was up. It had about 9 months at the bottom here and then started to move higher. All along, there were people saying Bitcoin will go under $100. And of course, it never went under $100. And there was a lot of time to accumulate before the breakout. Now, if you were waiting for the breakout within this particular zone, the breakout came above $300, $330. So you had some time here to try and buy the lows at 160, 200, 250, but then the safer entry was the breakout at around $320, $330. All right, so we just don't want to fall for this same trap again. Bitcoin will go under 100. Next cycle, this is where I was. I was here in the previous cycle. Bitcoin will go under 1,000. Bitcoin would go under 1,800, which was its previous low. Bitcoin will go under 3,000. It was all said there. But looking at these psychological levels, which was in this case the previous top, which was 1,100, it's just a nice round number that people always point to. The same thing for the peaks. Bitcoin's going to go to 50,000. This cycle was Bitcoin going to go to 100,000, 250,000, just these sort of round numbers. And it always fools the masses at those points, which then leads back to the same quote I was talking about here, trying to pick that last eighth of the move, whether it's the bottom or the top. You generally go broke trying to do that because you're waiting, and then all of a sudden it takes off without you, like we saw in April, and then it ran up really, really quickly, up to around $14,000 in the peak. And of course, that caught a lot of people out, thinking it's going to go to 20, and then a few months later, it starts to droop, sag, and head down from 10,000 to 7,000 with little bumps up down to 6,000. And of course, the pandemic washed out the rest of the hopefuls. This cycle, guess what? We're hearing this over and over and over again. Bitcoin will go under 10,000. I've got my position set under 10,000. If that never happens and you see the market run off without you, what are you going to do? Because it's okay to set your buy orders at under 10,000. But if it doesn't happen, what is the reverse plan for you? And that is something that really needs to come into play for a lot of people, especially if they forget here and the market doesn't hit that price target that they're after. What happens next? Because I can tell you that this exact same thing happened last cycle before, and in any other market where people are waiting for an exact price based on nothing more than the nice sound of a round number. And so what happened last time, people got caught out. It ran up to 5,000. It's going to come back. And then it didn't. And it runs to 6, 7, 8, 9,000 very quickly. It's going to come back and it doesn't. And then it keeps running. So you get these impulse waves to the upside, and it just pulls in all of the buyers who are waiting for lower prices, and they get sucked into the market, only to see it come back maybe halfway, 50%, and then run on again. So we covered a lot in this video in terms of timing and of course price as well, and the signals to look out for in case we don't get to that 10K level, in case 15.5 is the bottom, or in case we go slightly lower to 14. The timing is going to allow us to understand what we will probably see next. It's going to allow us to start to balance the probabilities for the bulls and the bears. It goes for the bull market and of course for the bear market. And just as a quick summary on that, we are coming towards the end of this particular time cycle. We've passed the first one. The second one is at around 411 days, which takes us out to Christmas, Boxing Day. And so if we don't see the prices head down, or there's no sort of catalyst waiting to at least give us a quick flash crash to those numbers, the probabilities then start to swing in the favor that the market is going to at least turn up for a period of time, and maybe put in a trading range like we saw in the last two cycles. The first cycle here being 9 months, the second one being approximately 3 to 4 months. And that could then lead us in a range of, say 15.5 is the low now. Maybe it jumps up to the low 20s or teens, and we start to see a range of mid-teens to mid-20s, and we start to bounce around there for those next few months. Now, if you want to be the risk adverse, the low risk option, you would just wait this entire thing out, find out where the trading range is over the coming months, and then on the breakout of the trading range, the macro breakout, that would be the entry signal for the low risk option. Of course, you'll then be buying at higher prices, but at least you're taking the low risk and you don't have your capital tied up in a market that is still trying to find a base. The macro time cycles are something that we spend a lot of time on at TIA Premium. We've got the Black Friday special coming up this week, so check out the link in the top of the video description. Drop your email address in the subscribe section, tiacrypto.com/subscribe. and you'll get those Black Friday specials coming up. Otherwise, like, subscribe, don't go anywhere, hit that bell notification icon because we'll continue to cover the macro cycles here on the channel as a regular addition to our other macro cycles that we look at in terms of the monthly updates, the crypto updates, and all that sort of stuff. So I'll see you guys here at the next video. Check out the videos popping up here on your left. Until next time, I shall get some better lighting. I hope you guys have a fantastic day. I'll see you then. Peace out.